Hi everybody, it's me, Gregory Mannarino, and welcome to the first installment in a series of videos which I'm going to do to discuss options. What I want to do with this video series is basically take away the fear and the anxiety that is associated with options. For some bizarre reason, when people hear this word, they become paralyzed. They become literally full of anxiety and fear and go, whoa, hold on a second. I can't get involved in that. This is too scary. I've heard this word before. I'm not sure what it really means, but I know it's not good. People, nothing could be further from the truth here. It's just a simple financial instrument that gives you, the buyer of an option, choices. Really, to put this into the most simple perspective, you could substitute the word options for choices. Let me put another perspective on this for you. Let's say, for example, you're going to go out and buy stock in company XYZ. Basically, you have no options at all or no choices. You buy that stock and you just hold on to it, and that's it. Well, with options, you have choices of how you want to play this, and the choices are absolutely immense. So, what we have here at its most basic form is an extremely versatile financial instrument that gives you choices or options about how you want to play this as a potential investor. You got it? I really hope that what I've just said takes a lot of the fear and a lot of the anxiety out of what options are. So that's pretty much it. Now, this is where it might become a little more frightening for you, but we're gonna fix this as well. An option is a derivative. I'm going to give you a moment to let that sit in. An option is a derivative. Now, I know there's huge amounts of anxiety associated with the word derivative. Now, it's funny. I can recall years ago, I was on a New York City subway train. I saw this gentleman looking at a bunch of charts. And I happened to just lean over and said, hey, what is that? He goes, it's derivatives. I says, oh, can you explain the derivative to me? He's like, no. It's too complicated. It would take really a long time. Well, unfortunately, this poor gentleman probably didn't know what he was doing or even talking about, because the derivative is simply this. A derivative is a financial instrument, in this case, that derives, notice the similarity in these words, it derives its value from something else. Kind of like a side bet. You got it? But the beauty of this side bet is leverage. Leverage. Now, leverage in terms of money means that you're able to angle yourself in such a way that you're gaining the absolute most out of your investment. There are many ways to gain leverage. One of these, if you're trading just stocks, is through a margin account where you have to actually borrow cash to do this. With options, you don't have to do this. It's built into the financial instrument, and that's what makes options so incredible. It's really that simple. Options, people, are simply choices that you as an investor have by purchasing an options contract. Options are derivatives. Now, the holder of an option does not have any stake in a company at all. You have no ownership. When you buy stock in a company, you have ownership in that company. So again, you hold an option, all you're doing is kind of taking up a side bet as to where you believe this particular asset is going to go in the future, and it gives you options through this mechanism known as derivatives. Derivatives are scary, right? No. I hope I explained this to you, unlike the gentleman could explain to me many years ago. A derivative is simply something that derives its value from something else. Now, the option or the choices associated with this financial instrument are very simple. This is basically what it comes down to. It gives you, the buyer of an option, a major choice. And it's not an obligation, okay? It's a choice. You, as the buyer of an option, have the option or the choice, but not the obligation to buy or sell a particular asset at a certain time in the future for a certain price. You understand? Let me break this down for you even further. And this is, I think, where people get confused. Let's say, for example, I come out on my business day market report, which I talk about this stuff all the time, and I say, I just bought July 50 calls on company XYZ. What am I saying? What kind of language is this? Sounds kind of scary, right? But it's so simple. This is what I have just bought. By saying I bought July 50 calls in this particular instance, is saying I bought an options contract which expires in July. Okay? July call. Now, the 50 part is the price of the underlying asset. Okay, so what I am hoping for by buying this option in company XYZ is I am hoping that it will hit its strike price, which I have chosen, of $50 in July or before July. Okay, that's the other thing that's associated with an option and why you have more choices. Let's say, for example, you just bought July 50 calls on company XYZ. You bought these a week ago, and all of a sudden the underlying stock in company XYZ shot up above 50. Now you're way in the money and your option has paid off. These pay off exponentially. The reason why that works and why leverage works with an option is this. All right, here's the key, another key I want you to pay attention to. Every single one options contract allows you, the buyer, to control 100 shares of the underlying stock. And there is your leverage. You understand? By buying one options contract, you have the power to control and have options and choices associated with 100 shares. It's a beautiful thing. Again, you don't have to borrow off of a margin or have a margin account or anything like this. This is why options are so lucrative. Now, all it comes down to when you want to trade an option is a simple choice once again. You're looking at company XYZ. You believe, based on whatever algorithm that you might follow, that company XYZ is going to rise over the next several months. That's all the choice you have to make, whether it's going to go up or down. It's that simple. There are a lot of instruments that are associated with calls that are up or down. Binary options is one of them. We're not even going to go there right now. We're just going to talk about options here. Okay, basic, good old-fashioned, simple options or choices. Okay, I like to say choices because it takes a lot of the fear out of it. If you say, hey, I have a choice, that sounds better than option, right? Anyway, so you made that choice. The company XYZ is going to rise over the next several months. So if you think it's going to rise, what are you going to do? You're going to buy a call option. Okay, a call option gives you the right, but not the obligation, to buy or sell. Well, buy in this case, stock in the company XYZ in the future at a particular time for a particular price. You can do this the opposite way too. And I know you know this word, short. You can go short an asset in the same way you can go long or betting that it goes up. Going short means you believe that the price of the underlying asset, company XYZ, is going to fall in the future. So you would buy a put option. Okay, it really comes down to this. The entire business and fear and anxiety associated with options comes down to two things, and two things only. Calls, you think the asset is going to go higher, or puts, you believe the asset is going to go lower. You understand? And you can do this through options, having incredible amounts of leverage. Again, why? Because one options contract lets you control 100 shares of the underlying stock. This is the beauty of options here, people, and why they are so simple. And I think the simplicity of it is what people get so fearful of, because it only comes down to a call or a put. Basically, that's it. So look, this is the reason why you should be trading options, because they're simple. It comes down to a few choices that you need to make. For example, whether you think an asset is going to go up or down. And then you need to decide, and we're going to talk about this in further videos, where you should buy a particular option. In other words, regarding its strike price and its expiration. But that's going to be the topic of another video. I really hope that this short video has kind of, made you understand why you should have no fear whatsoever about options or derivatives, because they're really not that scary. And if you can get a handle on this, and you could just understand some basic concepts that we're going to go over and further down the line in this series, you're going to make stupid amounts of money, and you're going to be really happy that you found this video today. Speaking of that, if you think this video has been informative or interesting, give me a thumbs up, share this video, and let's pay attention to all these people, because let me just say this, and I discuss this all the time on my Business Day Market Report, which I really hope you're also following. There's a link right down here in the description of this video. Never before in the history of the world has there been a better time to be a trader or an investor in these markets. And we're going to make this work. We're going to take advantage of this to the nth possible degree. And why? Because we have options. I'll see you on the next video installment. Take care.